Man, I can't believe my first video is about GameStop. Hey everyone, my name is Tim Moore and welcome to my channel. This is a place where you're going to find information about the stock market, about retirement, investments, personal finance, and a lot of other topics that I hope is really going to help you. And I'm really excited to be able to start this thing. I want to provide weekly updates on the market and really important information that you can use to make better financial decisions. Maybe you're someone that really loves geeking out about stocks and bonds and what's in your portfolio and your 401ks and your IRAs. Or maybe you're someone that just doesn't know what to do because the bills are piling up, you've got a mountain of debt, you haven't even thought about what retirement might look like because it doesn't even seem possible for you. No matter what end of that spectrum you're at, this channel is for you, and I want to be help to you. So reach out to me, drop me a message, leave a comment, because that's how we're going to find new content for this channel, your questions and what you want to know about. So let's get started today. The market is gone crazy, but not the entire market. These so-called meme stocks. What's a meme stock? I'm not even sure if I know what a meme stock is, but it's kind of the term been given to these highly shorted, and I'll talk about that in a second, stocks that are being just exploded right now and run up. And you're probably seeing on the news and on Facebook because they're really going against the big boys, the hedge funds, the Wall Street billionaires. They're the ones that are getting screwed in this whole thing. And the little guys are assembling together and they're defeating the giant, and they're driving the prices of these stocks up and up and up. Well, I don't want to get into the weeds about why all that's happening and how all that's happening, but I do want to give you a base foundation as to maybe what's really going on here, and just so you can be better informed and not thrown off and wonder, oh, does this have anything to do with my retirement or my investments? Or, Tim, should I be doing anything with these companies that seem to be exploding, and I don't want to miss it? I mean, that's part of the market, right? Is participating in the rallies. So what's happening here is you've got a number of stocks that I said earlier are highly shorted. What does a short mean? Short selling stock basically means you are betting on the price of that stock going down because you believe that that company is fundamentally overvalued. Most of the market moves is done by what's called longing a stock or buying stock. That's what each one of us do when we make purchases inside of our 401ks, our IRAs, our brokerage accounts. Anytime we buy a stock to hold for the appreciation of that stock, that is going long. Going short is the opposite of that. So if you think a company is going to go down in value, their stock share price is going to go down, you would, if you're approved for it, you would short it. That means you would borrow that stock from your brokerage, and you would immediately sell that stock for the current market price. And then, in time, you hope, the price goes down. And then at some point, you will buy back that stock that you borrowed because you have to return it to it. It's like a loan. So if you buy it back at a lower price and give it back, return it to the brokerage, guess what? You get to keep the difference. It's a way to profit from the other direction of the market. And there's a lot of money that can be made in that, especially during turbulent times in the market when, like 2008, 2020, when the pandemic hit and the market crashed 30% in the course of 3 or 4 weeks. If you were short the market, you would have made a killing if you knew when to get in and when to get out, just like any other trade. So the problem with short selling, or maybe not the problem, but the higher risk, and the reason that not everybody's just automatically approved to short sell in your brokerage accounts, is that it carries more risk than going long a stock. Why is that? Well, when you buy a stock, you already know your cost basis, which your cost basis is how much you paid and how many number of shares. So if I buy Apple at $300 a share, for example, and it's not that much now, but it used to be before the stock split. If I buy 10 shares at $300 a share, how much is that? That's $3,000, right? How much can I lose on that trade, in theory? Well, in theory, I can lose $3,000, right? My entire investment. Now, it's probably pretty unlikely that Apple is going to go to zero and cease to exist as a company because they've been around for decades and they're often been the most valuable company in the world, and they continue to innovate. They have a ton of cash on hand. They have a very strong balance sheet, and they have a wonderful business model that we're all addicted to, which is their iPhones, iPads, other devices. They're doing fine. But let's just say Armageddon happens. What's going to happen? You're going to lose everything. That's your risk. You know the risk going in. $3,000 in, $3,000 out if it goes to zero. If you short that same stock, your potential risk of loss is infinite. Why is that? Because a stock, whatever the price is, can only go to zero. So it's the defined risk. You know that amount. A stock can theoretically go up forever. There is no maximum stock price or share price that a stock can have. It's whatever someone's willing to pay for it. So if I short Apple at 300 and it goes to 1,000, which is entirely possible over a period of time, what's my loss? It's if I'm shorting 10 shares, it's not $3,000. What is it? It's $7,000. If I'm foolish enough to wait until it's $1,000 a share times 10 shares, and I have to buy it back at $10,000 compared to my $3,000 initial investment, that's an over 100% loss. That's a 200 and something percent loss. 7,000 for $3,000 risked. So the risk goes up quite a bit depending on what happens with the stock. And a lot of what's happening with GameStop and with AMC, with some of these other tickers, is they are highly shorted. So a lot of hedge funds and other large investment companies have believed that this is probably true, an overvalued company, because GameStop doesn't make money. I mean, they've had losing years in a row here. They've got a outdated business model. They're kind of the Blockbuster of gaming, and most people are on digital now. So I don't know about your town, but around here, GameStops tend to go out of business more than I don't see them building any new GameStops. So is it worth $200-$300 a share? Probably not. But what's happening is that stock was so heavily shorted. That means so many big companies were piling in and selling it because they thought that it was going to go down. And they thought nobody's going to be buying this company. That's worthless. Who wants GameStop? Well, then what happened is there's this group of what we call retail traders, which that's you and me. Retail are not hedge fund managers or big investment guys. They are average Joes sitting at home, working from home, bored. Maybe they've taken their stimulus money and said, I want to try my hand at day trading. I want to see if I can make some money in the market. They get on the Robinhood app and they put some money in and they look for information. So they go online and they go to a place called Reddit and they find this group called Wall Street Bets, and they seem really weird, but my goodness, look at these screenshots of these amazing profits. So they decide to try. And so enough of these guys got together on this Reddit site and they said, we are going to go in and we are going to intentionally buy shares of GameStop. And the price went up and up and up. And what happens when it starts to go up is when you are in a short position, you usually have some sort of stop loss, just like you would if you were in a long position, except getting out of that position when the stock goes down. If you're short, you're going to get out of that position if the stock goes up to a certain price. So what happens you've probably heard the term now, a short squeeze, is when there's a lot of short interest in a stock. When that stock price starts to rise and hit those stop orders, that just creates more and more buying volume and buying pressure on the stock, overwhelms the demand for the stock, and the price continues to just accelerate and go parabolic. And that's what we've seen in the stock. So what do you do about that? Is that anything you need to worry about? Not necessarily, because I don't want you to be distracted by it. I don't want you to think that, okay, this is the new wave and I got to understand this and I get in on it. That's how to make money in the market. Listen, I'm going to be honest with you. These guys trading in this, congratulations to them. They've made an incredible sum of money in a very short amount of time. Like any stock trades that do that, it's temporary. It's not going to be the new trend. GameStop is not going to become the new Apple. It's not going to be at the top of the S&P 500. This is a phenomenon that's happening all the time in markets. It's more common in lower traded stocks, lower valued stocks, often called penny stocks. You'll have what are called pump and dumps, where you'll get a lot of people pumping up one stock. You'll get a lot of day traders into it. They'll pile on. They'll run the price up, and then eventually that runs out of steam, and the stock comes crashing back down. I don't know where GameStop and all these other stocks end. I don't know when this whole cycle will end. Will it be another day or two? Will it be a week? Will it be a month? Nobody knows. But what we do know is, in the long term, and as investors, we are long term. We are not short term mindset only. We are mostly long term. We know that the intrinsic value, the actual value of GameStop and these other companies, is not worth what it's trading for right now. So eventually these are going to come back down and settle back into reality. Yes, some things might change fundamentally along the way about Robinhood and how stocks are traded and how hedge funds can short and how information can get disseminated online for these things, but that's irrelevant to us. This is an interesting time, and an interesting time to really pay attention and to consider what's my portfolio doing? What are my objectives? Am I meeting my objectives? Is my financial advisor helping me understand what's happening in my portfolio? And that's really the important part, is that we continue our long-term plan. This frothiness and this euphoria amongst these little stocks and what's happening here may be a signal that the market's ready to kind of change its mood a little bit. Or maybe not. Maybe it keeps going. Maybe this gets the focus off of the major markets for a period of a week or two, and so they go sideways, and then we continue in whatever direction it wants to go. The point is, you need to continue your long-term outlook. Understand what's happening, because it's interesting and it's important and it's good to know these things, but don't let it dominate your mindset and your thinking. So that's the update that I want to give you today. And I hope to come back each week with a quick market update, and then also some practical videos that really deal with some of those topics I talked about at the beginning. So do me a favor, if you have not already, like and subscribe to this channel. That'll help alert you when I make new content. It'll also help me reach more people and really start to build this brand and this business. Thank you for watching. Thank you for being a part of this conversation. Leave a comment, please, if you have questions. If you disagree with something I said, I'd love to hear that too. Let's get this going, and I look forward to seeing you soon.